What's going on, guys? My name is Richard and welcome to this week's focus list sponsored by Marketsmith. Overall, there's 14 stocks I'm looking to buy this week: AMD, Band, Chegg, Dexcom, LVGO, NBIX, PCTY, Peloton, REGN, RNG, Teledoc, Team, Tesla, and TTD. For each of these stocks, we'll examine their fundamentals in Marketsmith and then head over to TC2000 and talk about the setup that I would use to buy each of these stocks. And let me know what stocks you're looking at and give me your top 3 picks for the upcoming trading week. And remember to leave a like down below on the video. But starting with AMD, which has been a regular on this list, you can see fantastic recent earnings, up 200% last quarter, sales are up 40%, and the after-tax margins were up as well, up 12.4%. In terms of annual estimates, you can see for 2020, they're up 59%, and for 2021, up a further 46%. The EPS rating is a 99, the Group RS is an A+, the SMR rating is an A, accumulation distribution is a C+, and the overall composite rating is a strong 99. Taking a look at the fund ownership, you can see a nice increasing trend. Every stock that I look to buy, I want to see this exact trend, and you can see there's 3 high-quality funds investing into this company. So now looking at TC2000, you can see it's been in a cup and handle formation, although this handle is a bit deep, but it's been consolidating nicely and is maybe forming a VCP pattern right here. And you can see it broke through this downward trend line right here and just peaked above it last week. So I want to see a substantial move on volume through this line or a breakthrough of the previous all-time highs at 59.38. Next up on the list, we've got Band, which provides cloud-based software-powered communications platforms for businesses. And you can see it had a really strong earnings report, up 133%. Sales were up 29%, and after-tax margins were up as well. You can see it's just supposed to be profitable in 2020, and for 2021, it's supposed to make pretty large gains, up 900%, with the revisions being up. The EPS rating is a 64, the Group RS is an A+, the SMR rating is a D, the accumulation distribution is an A+, and the overall composite rating is a 98. Taking a look at the fund ownership, you can see, once again, a nice increasing trend, and you've got 2 high-quality funds investing into this company. So looking at the setup, you can see from its chart, it's been doing very well recently, and you can see a lot of big up volume, especially on this day right here on the breakout. And so far, it's been consolidating nicely after this big run up, and it's been pretty tight. So for me, I either want to see a green dot setup or a breakthrough of this prior pivot at 119.98. Next up on the list, we've got Chegg. And taking a look at its earnings, you can see nice steady earnings the past couple quarters. And last quarter, a very strong report, up 47%, sales were up 35%, and after-tax margins were up 22% as well. And you can see for 2020, the estimates are up 24%, for 2021, up a further 20%, and the revisions are up, which not many companies have in 2020. The EPS rating is a 98, the Group RS is an A, SMR rating is an A, accumulation distribution is an A-, and the overall composite rating is a strong 99. Taking a look at the fund ownership, nice increasing trend as always, and you've got a couple high-quality funds investing into this company. And if you're not familiar with what they do, they basically provide digital products and services with regards to education. Now, moving over to TC2000, let's take a look at their chart. So they had a very strong earnings report and a big gap up on huge volume, and they drifted higher for a bit, but then consolidated slightly, and this is where I'm looking to get in, either a breakthrough of the 67.98 level or a green dot setup. Next up on the list, we've got Dexcom, which I currently own from the cup breakout right here, but I sold half of it right here as it started to consolidate. So what I'm looking to do is add that half back on if it challenges the previous all-time highs. Taking a look at its earnings, you can see very strong performance the past couple quarters, and that really is what drives the stock to dramatically increase in price. Last quarter, it was up 980%, sales were up 44%, and after-tax margins were up as well, 10.2%. For 2020, the estimates are up 14%, and for 2021, up a further 41%, with the revisions being upward. The EPS rating is a 76, the Group RS is an A+, the SMR rating is an A, accumulation distribution is an A, and the overall composite rating is a strong 99. Moving over to the fund ownership, you can see, once again, a nice increasing trend, almost double what it was 2 years ago, and you can see a ton of high quality funds investing in this stock. And this really is exactly what you want to see in a stock that you have a strong conviction in. Now moving over to TC2000, let's talk about the setup. So as I said, I bought it right at this cup and handle right here, and now it moved up strongly, up 50%, and has been very tight and is within 5% of all-time highs. And what I'm looking to do is either add that half position back on as it breaks through this pivot at 428.59, or if it forms a green dot indicator. Next up, we've got another potential true market leader in LVGO. And taking a look at its earnings, you can see very strong reports the last 2 quarters, up 133% last quarter. Sales were up 115%, and after-tax margins were up as well. You can see the annual estimates say it's not supposed to be profitable in 2020, and in 2021, you can see it's barely supposed to be profitable. The EPS rating is a 76, the group RS is an A, the SMR rating is a C, the accumulation distribution is an A+, and the overall composite rating is a strong 98. Moving over to the fund ownership, you can see a nice increasing trend, but you only have one fund from their high quality IBD mutual fund index investing into this company. Moving over to TC2000, let's talk about the setup. So once again, this had a very strong run up since the market bottom, and really it's been one of the top performers, and you can see a bunch of signs of institutional accumulation with big spikes like this, and like this. And overall, since its run up, it hasn't really given that many entry setups. And you can see that after its strong earnings report, it gapped up slightly, and since then has been moving sideways. So what I'm looking to use for this is either a break above this pivot at 63.55 or a green dot indicator. Next on the list, we've got another healthcare related company, which is a pharmaceutical company, Neurocrine Biosciences. And you can see strong earnings reports the past few quarters, up 183% last quarter. Sales were up 71%, and after-tax margins were very strong as well, up 33.4%. For 2020, the estimates are up only 4%, but for 2021, they're supposed to be up a further 42%, although the revisions are down. The EPS rating is a 77, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a 98. Taking a look at the fund ownership, you can see a nice increasing trend, and you've got 3 high-quality funds investing in this company. And moving over to TC2000, let's talk about the setup. So overall, it's right near a green line that it's set way back in 2018. And what I'm looking to use is a strong green line breakout, which is a close above this green line on above average volume. And what I really like about this stock is it's been very strong since the market bottom. And you see, once again, signs of institutional accumulation in big up volume. So like right here and right here. So that is NBIX. And next up on the list, we've got PCTY, which is a cloud-based provider of payroll and HR software. Taking a look at the earnings, you can see nice high-quality earnings reports, up 80% last quarter, sales were up 23%, and the after-tax margins were up 27.1%. In 2020, the estimates are up 21%, but in 2021, they're supposed to be down 4%. The EPS rating is a 99, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a strong 98. Taking a look at the fund ownership, a nice increasing trend once again, and you've got 5 high-quality funds investing into this company. Moving over to TC2000, let's talk about that setup. So overall, this hasn't been really leading the market because it is still just coming out of that kind of first consolidation after the big correction, but you can see there's big signs of institutional accumulation right here and in the previous days. And overall, since then, it's been consolidating a little bit, and what I'm looking to do is buy it as it breaks through this 124.74 level on above average volume. You can see it had a green dot on last Tuesday, but since then has kind of just gone sideways. And eventually I do want to challenge this previous all-time high at 150.24. So next up on the list, we've got Peloton, which is a recent IPO. And if you don't know, they provide recreational kind of equipment like ellipticals and that type of thing. But overall, you can see they are not yet profitable, although that sales growth is there. And if there aren't earnings, I do want to see big sales growth, hopefully triple digits. And this isn't quite that, but it's still pretty strong. And overall, you can see for 2020, the estimates say it's not going to be profitable. And also for 2021, it's also not yet supposed to be profitable. The EPS rating is a 12, the group RS is a D+, the SMR rating is a D, but the accumulation distribution is an A+, and the overall composite rating is a 69. Taking a look at the fund ownership, you can see a nice increasing trend and one high quality fund investing in this company. Moving over to TC2000, you can see that Peloton has been moving up sharply since the market bottom, and you can see that they're now consolidating slightly and are below this pivot at 49.68. So the setup that I plan to use is either a green dot indicator or a breakthrough of this prior pivot right here. And I really like this setup because it is a potential green dot right over a green line, which I found has worked very well for recent IPOs. Next up on the list, we've got REGN, and let's take a look at those earnings. You can see they're nice and consistent and had a big jump last quarter. So up 48%, sales were up 33%, and after-tax margins are very strong at 42.2%. For 2020, you can see the estimates are up 9%, and for 2021, they're up a further 15%. The EPS rating is a 97, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B-, and the overall composite rating is a very strong 99. Taking a look at the fund ownership, nice increasing trend, and you've got 3 high-quality funds investing in this company. Moving over to TC2000, it's also a potential green line breakout, just like NBIX, and this is a very long-term base right here. You can see it really hasn't gone anywhere since late 2015, and this is exactly what you want to see in a green line breakout. The longer the consolidation pattern, the better, and the more explosive that the stock can be. And you can see it's moved up sharply and has since consolidated right below this green line and seems ready for another move up. So the setup that I plan to use for this stock is either a green dot right here or a green line breakout above the 605.93 level. So next up, we've got RNG, which is also kind of like Zoom. It develops software for firms to communicate with staff via the internet. And overall, the earnings and sales growth isn't explosive, but earnings were up 12% last quarter, sales were up 33%, and after-tax margins were up 6.5%. For 2020, the estimates are up 12%. For 2021, the estimates are up a further 29%, and the EPS rating is a 90, the group RS is an A+, the SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a very strong 98. Taking a look at the funds, you can see once again a nice increasing trend, and you have a bunch of high quality funds investing into RNG. Moving over to TC2000, let's talk about this setup. And you can see it's actually at a couple points of support right here from this previous line of resistance, and it's pulling back right to that breakout. And the setup that I plan to use is either a bounce off the support right here or a green dot indicator. And I want to see it move up sharply on above average volume. So next up on the list, we've got Teledoc, which is a previous very strong stock that has been consolidating for the past couple of weeks. And overall, you can see there's not really any earnings growth, but the sales growth has been very consistent. And looking at the annual estimates, you can see it's not supposed to be profitable in the next coming years, although it is being revised upwards. The EPS rating is at 39, the group RS is an A+, the SMR rating is a D, accumulation distribution is a D-, and the overall composite rating is an 87. And taking a look at the fund ownership, nice increasing trend, and you have a whole lot of high quality funds investing into this company. Moving over to TC2000, let's talk about these setups. So as I said, it's kind of been just moving sideways for the past couple of months, and really it needed that because it's been moving up very sharply since really October of 2019. And overall, it kind of needed that consolidation, and it seems ready now for another move upwards. So overall, I want to see a green dot indicator right here as it starts moving up this right-hand side, or a breakthrough of this prior pivot at 196.19, or a breakthrough of this downward trend line right here. So that's the setup that I plan to use for Teledoc. And next up on the list, we've got Team or Atlassian, and they basically have, they develop software to help with teams and management via the internet. And taking a look at the earnings and sales, you can see a nice consistent trend, although it was down last quarter compared to the previous quarters, up 19%, sales were up 33%, and after-tax margins were up 15%. But for 2020, you can see it's supposed to be up 28%. For 2021, up a further 23%, and the revisions are upwards. The EPS rating is a 98, the group RS is an A+, the SMR rating is an A, accumulation distribution is an A-, and the overall composite rating is a 99. And taking a look at the fund ownership, you can see, once again, a nice increasing trend, and you have 5 high-quality funds investing into Team. Moving over to TC2000, let's talk about the setup. So I actually bought this one on the breakout right here, which was very strong, and the best stocks never revisit their breakout point, which is exactly what Team did. And now it's kind of setting up a short-term shelf and consolidation that is a chance for either a swing trade, initial buy, or an add-on for a position trade. And what I'm looking to do is either add on if it breaks through this 190 level or forms a green dot indicator. Next up on the list, we've got Tesla, which manufactures high-performance electric vehicles. And overall, the earnings growth has been very strong recently, up 143% last quarter. Sales were up 32%, and after-tax margins were up 3.8%. For 2020, the annual estimates are up 999%, and for 2021, it's up a further 250%. The EPS rating is a 65, the group RS is an A+, the SMR rating is a C, accumulation distribution is a C+, and the overall composite rating is a very strong 97. And taking a look at the fund ownership, a nice increasing trend, and you've got 4 high-quality funds investing into Tesla at this time. And taking a look at its charts, you can see it's been very tight the past couple weeks, really just going sideways since mid-April. And especially recently, you can see the Bollinger Bands are really tightening up, and that means it's either ready for a pop upward or downward. And I would buy it if it breaks through this 869 level right here and hopefully eventually challenges those previous all-time highs and maybe hits that 1,000 mark. But overall, that's what I'm looking to do, or a Bollinger Band bounce since it's so close to this lower Bollinger Band. And finally, we've got TTD, which has been setting up nicely recently. And overall, you can see nice, consistent earnings reports, up 84% last quarter. Sales were up 33%, and after-tax margins were up a further 27%. For 2020, you can see the estimates are down 28%, but for 2021, it's supposed to pick right back up 42%, with the revisions being upwards. The EPS rating is a strong 99, the group RS is a B, SMR rating is an A, accumulation distribution is a B, and the overall composite rating is a 98. Taking a look at the fund ownership, you can see a nice increasing trend, and once again, you have a ton of high-quality funds investing into this company, which is exactly what you want to see. You want to be following the smart money. That's what really moves the markets. So taking a look at its chart, you can see once again, it's been consolidating nicely. I had it on my watch list last week as well, but just kind of moved further sideways. And overall, it's in a kind of cup and handle pattern right here, right below this resistance at 327.35. And it is actionable based on a green dot setup early next week, so you could buy it then. But I would look to wait until it starts moving upwards on above average volume, suggesting that institutions are acquiring more shares. So that is my game plan for this upcoming trading week. I hope you guys enjoyed. Make sure you leave a like down below and also comment what your top 3 picks are for this upcoming trading week. Thanks so much for watching, and also let me know down in the comments whether you like this format better, where I'm switching in between Marketsmith and TC2000 to make sure I'm talking about both the fundamentals and setup for each of these stocks right after each other. So that's it for the video. Thanks so much for watching, and I'll see you guys in future videos.